Happy sunny Tuesday, everybody. It's October 14th. Scott Riley, the market update desk, NMLS 157524. Well, in sports last night, not much as far as Michigan teams, but we did see Seattle take it to Toronto and saw a unique 8-6-2 double play in the Dodgers game. The first one that I can remember in ages, maybe the first one ever, specifically in the playoffs. So, kind of interesting games last night. Today, we're seeing bonds being helped, meaning improved, due to trade tensions between the US and China. Now, last week, as we reported, China said that they would not allow rare earth minerals to be used by the U.S. military. And remember, China has a chokehold of about 70% of the rare earth elements in the world. Now, as a result, the U.S. announced a 100% tariff on imported China goods starting November 1st. Now, last night, the ping pong ball went the other way. China retaliated and sanctioned 5 U.S. subsidiaries of South Korean shipping company. The back and forth has escalated, and in the mortgage world, at least, it's putting pressure on yields to the downside, which is improving mortgage rates. Now, oil prices, something also very good if you've noticed at the pump. In fact, I filled up today for $2.77 a gallon. They've moved lower to 58 and a quarter a barrel. Now that's at its lowest price since May. So those are good things. Now, as an ancillary benefit, oil is important for everything, as every good that is produced and shipped has oil usage to some extent. So it could be very beneficial to upcoming inflation reports whenever we may get those, keep in mind. So we've got some positive things going on the inflation front. Yesterday, we saw Fed President Anna Polson speak. I'm sorry, that was this morning on CNBC, and she was in favor of 2 more rate cuts this year, which is what we're hoping to hear from more Fed members. Now, she's not a voting member, but that voice still does have impact on the other members as they start to see more movement towards a need for 2 cuts. We've entered day 14 of the shutdown, and one of the keys potentially to ending it may be pressure on the ATCs, air traffic controllers. Today's paycheck for those air traffic controllers was about 70% of their normal paycheck. Their next paycheck, which is due October 28th, will be the first fully one that is missed unless there is a resolution. Now, once flights start getting delayed further or canceled altogether, as many of these workers may not want to work for free, that pressure could flow down to the government negotiators, especially because of the upcoming holiday season, and maybe we get some pressure to get a resolution. Now, who's paying the tariffs? Goldman Sachs came out today, released a new report analyzing who's paying for these tariffs. They found out that exporting countries were picking up about 25% of it, which is the most ideal, and 25% of the tariffs are being paid by the supply chain. That leaves about 50% that's being picked up by consumers. Now, the National Federation of Independent Businesses came out with their September optimism index, showed that confidence has dropped. Companies expecting the economy to improve fell 11 points, while those expecting higher sales fell 4 points. So again, to the negative side. Now, earnings season today started off again this week. Yet again, we're in earnings season. Big one today was J.P. Morgan Chase reported a beat on estimates of top and bottom line. Their revenue came in at $47.2 billion. Now that's versus estimates of $45.4 billion. So a beat on top and bottom line for Chase. Now we're seeing also last week Secretary Bessent announced they were down to 5 candidates for the pick of the next Fed chair. We're seeing today the Dow rallied from down to up, so we went from red to green, a flip of about 600 points. In fact, right now we're sitting about plus 351 in the Dow. 10-year is teasing the 4% rate. We're at 4.03. So the trade issues with China are actually benefiting the 10-year Treasury, which is benefiting mortgage rates. That's great news as we pick up into this fall season with business definitely ramping up, especially first-time buyers are coming out and saying now is the time. Picking up a house in the fall, much less competition, much fewer situations with escalation clauses, bid over ask, and a little bit longer on days on market. So we're seeing some advantages for buyers. Give us a call. We'll break down all the information for you and help you with your pre-approval. 616-293-2189. Scott Riley, the Market Update Desk. Enjoy your afternoon.